Alright, so imagine the economy is like a huge garden. Sometimes it's overflowing with crazy growth. Think weeds everywhere, plants going wild. Other times it's struggling, looking a little brown and wilted. Now the folks in charge, central banks and governments, have two big watering cans: monetary policy and fiscal policy. Let's break down what these mean. Monetary policy is all about the money supply and interest rates, and it's handled by the central bank. Fiscal policy, on the other hand, is about government spending and taxes. Both can be either restrictive or expansionary, and they're used kind of like fertilizer or pruning shears, depending on what the garden needs. So first, expansionary policy. Picture a garden that's looking a little sad. Plants aren't growing, maybe there's a drought. Expansionary monetary policy is like opening up the hose, bringing in more water. So the central bank lowers interest rates and pumps more money into the system. Banks lend more, people spend more, and businesses invest more. Expansionary fiscal policy is the government planting new seeds, spending on projects, or cutting taxes so you have more money to spend. Now what if the garden's out of control? Tons of weeds, plants choking each other out. That's where restrictive policy comes in. Restrictive monetary policy is like turning down the water pressure, raising interest rates, pulling some money out of the economy, making borrowing harder. It slows things down, tames the wild growth, and keeps inflation in check. Restrictive fiscal policy is the government pulling back, raising taxes, or cutting spending so there's less money flowing through the garden. So why does this matter? If you use too much expansion, you risk inflation. Prices go up, your money doesn't go as far. But if you make things too restrictive, you can stunt growth, unemployment rises, and the economy shrinks. It's all about balance. And here's the key: these tools aren't perfect. Sometimes it takes a while for the water to reach the roots. Policies might lag, or the effects might be stronger or weaker than expected. Plus, central banks and governments don't always agree on when or how to act. So next time you hear about rate hikes, stimulus packages, or budget cuts, it's just the gardeners making decisions for the health of the whole economy. Understanding their tools, and when to use them, is what makes a great economist. Thanks for tuning in. If this helped clear things up, hit like, and I'll catch you in the next one.